I don't know. I'm just insane. Anyways, okay, so we got some bears out here. I mean, that's kind of so. I'm not. Let me get into fundamentally. Let me just kind of say it this way. I don't really have a strong bias. Like, so I know that that's not as exciting content wise. For me to say like for weeks on end. Yeah, kind of neutral on gold, but that is the truth. But from a technical basis, I can kind of give you a bit of a bias. So like if I'm only technical focused right now, this looks like it is pretty close to a reversal. Now, you could draw, if you want to get into trend lines for a second, we could draw this thing a little bit differently and say but even if you draw your trend lines in this way, right? If you draw trend lines and you look at this, by the way, I spoke to I had a podcast interview with the queen of trend lines herself, Tori Trades. She came to our office yesterday. It was pretty cool. We were all like, what? You want to come to our office? Sure. It was cool. We sat down, we did an interview. It was awesome. But that podcast, a lot of content, a lot of file sizes and, stuff to go through, but we're going to get that put together. And I know a lot of people were really excited to hear we're doing a sit down interview. So it's going to be fun. Or it was fun, but the video upload will be really fun. I think the bulls, if we close like this, and this is the determining factor here. The way we close today is really big, because if we close like this, let's say that the candle at the end of the day looks like this, guys, right? That's a different candle than if it closes like this, where it's just a big, downward candle that closes decisively at the lows. Those are two different candles. First of all, we're sitting at a major level of support. Everyone's got that level of support on their screens, right? Gotta be like anyone who's watching the daily chart on gold, which is a lot of people. Huge level of support around that 3,200 level. We failed at 3,200. We're now going lower. We're under support. It depends how we close, but if we close like this, it's very probable, in my view, that we're headed down to test 3120. And it would not be out of the question that we actually see us go back to test 3,000, 2960. So I think if you're bullish on gold, and we close like this, I think we still could acknowledge, okay, well, even if I'm bullish, we may still be seeing some corrective moves that we have not had in a while. What is this? Is this a 61.8% retracement? Nope, it's even more. We're about to test the 61.8% retracement on gold. This is a big level psychologically. You also have huge support here. So I think if you're bullish, the next question mark becomes this 61.8 to 3120 level of support, right? That's kind of your big spot to watch if you are, bullish on gold, because here's the thing. This price action is rough. This trend line completely failed out. This trend line is still a ways away before getting tested. The Fibonacci retracement, so we're going very technical here. The Fibonacci retracement, 61.8, is still below price. So that's kind of where I'm at with this. I feel like if you're watching gold, this level of support was so critical for the bulls to hold if we were going to have kind of that short-term continuation of the melt up. In my view, we have kind of failed out here, and likely we may be doing one of these guys here down to, this level here. The question then becomes, from there, how do we react? Because clearly you can see how we're reacting to this level. Let me zoom in a little bit. You can see how we're reacting to this level, right? We're reacting pretty poorly. Bears are taking control of this level. Of course, watch how it closes today, because this can be deceiving. If we snap back and we have like if we have that candle today, that's a different candle. So watch that. But from a technical basis, we've so far, depending on how this candle closes, potentially are failing at this key level at 3,200. So that could lead to further downside in the short run. And if we see continuation, like more failure, that's something to be very, very cautious about.
Market analysis, free trading courses, edge finder data, and special offers. What do these things all have in common? They're all available for you right now inside of our free Discord. You can click the link down in the description below to join the free Discord today and get access to all of this and more. Stay up to date with all the latest trading information and A1 content. And if you want to upgrade to our Gold VIP Discord that features every single trade that Trader Nick and our other professional analysts take, you can find the links for that in the description as well. So don't wait, go check out the free Discord today.
Anyways, let's take a look at our list here. Top setups currently on the Edge Finder. Top setups, of course, is considering some of our key economic data, sentiment, technical and economic reads. So yesterday with inflation, what you'll notice is that Edge Finder is giving some really generous inflation scoring for the S&P 500, the NASDAQ, the Dow Jones, and the Russell. So do you notice this? So indices got a mega boost in score on the Edge Finder from CPI. Let me ask you, does that make sense? Does that make sense? Just logically, you can answer if you'd like in the chat, or just rhetorically think about this. Yesterday we had inflation data that was incredibly promising because people have been really worried about inflation dramatically rising. Well, yesterday we had the 3 in a row, which on this channel, we talk about this. If you're a regular, you know this well. We talk often about 3 in a row being an important trend rather than just a fluke. Sometimes you get a weather storm, or you get something that can just skew the data a little bit in a singular month. But when we talk about inflation data, right, coming in 3 times in a row, lower, aka better than expected, that is a trend. So we've got a trend here forming for inflation data being better or lower than expected. In fact, I don't know if you guys picked up on this. This is a 5-year low for inflation. Now, is this Donald Trump is doing an incredible job and he's saving the day? I mean, depends who you ask. Some people might say yes, some people might say no. I would say that oil prices being down have really contributed, but that Jerome Powell and team have done a pretty good job, in my opinion, considering a challenging environment. However, let me not go too easy on them. If they stick to the inflation problem from here and still push back on rate cuts, then my opinion might change a little bit. Here's the progress we've been wanting to see. We're seeing a trend down now. 1 or 2 months down in inflation, that's not necessarily a trend, but you get 3 in a row, and it looks to me like we've got some good, steady inflation data improvement. The labor market is holding up okay. I do think now it is appropriate to cut interest rates. Okay, so does that mean a rapid rate cut? No, but I think we're sufficiently restrictive. They themselves have said they feel restrictive. And so now that we have inflation data getting closer, maybe we can dial it down a little bit on the rates, right? And so I think that is a middle ground take. I think that, to be honest, I think that Powell will acknowledge that. If he sticks too much to the inflation and employment data, I mean, we had some really good data here, but also we had signs that it looks like the probabilities of a mega horrible war of attrition trade war is less likely now. So to me, that says 2 words: rate cuts. My opinion, we should be cutting rates pretty soon. Again, where that goes, where people get really, and you guys have all probably seen it, there's a lot of people who are very politically charged, blaming everything on Trump, or giving all the praise to Trump, or blaming everything on Powell, giving everything to Powell. What I say frequently on my channel that I try and do the best I can with is to keep an eye on just the data. Let's look at the data. Let's study this, right? Because this will help to guide us, and not to get lost in the headlines and the hype and the fear and the all the craziness that's out there. So inflation data is coming down. Jobs data is holding up okay. Rates are pretty high relative to recent times, at least. and maybe have room to come down. So does that make me bullish on the indices? Yes. That is why when we go to the top setups page, everything that I just discussed was automatically derived in our scoring algorithm. We got a +3 for the Dow. We got a +3 in inflation for the NASDAQ. +3 score S&P, and +3 for the Russell. Now, if you don't know what that means, if you're like, I don't know what your scoring mechanism here is, if you're new to the stream, all this is doing is we're looking at economic data, which we know impacts the markets. We know that's really important to the markets. But more importantly, we're saying, okay, there's a lot of economic data to keep up with. So let's build a system that automatically keeps an eye on services PMIs, GDP numbers, inflation data like CPI, employment change. It's looking at these things and essentially tracking it all and generating bullish and bearish biases. So when I look at the NASDAQ, the Dow Jones, the S&P, and the Russell, this very bullish bias is appropriate to me. Now, very bullish, let me outline what I mean by that, because sometimes people hear me say, oh, I'm very bullish on these things, and they hear, so you're like every day, full port, buying calls, you know, 0 DTE calls, and you're betting that this market's just going to go straight up. And the answer is for that, like I am bullish. I think that the path of least resistance is higher. But first of all, I don't know that it's going to go higher. There's no guarantees that it goes higher, first of all. But second of all, if it's going to move higher, if I'm going to be involved in that, I do at least want to wait for corrective pullbacks on the 4-hour and the daily chart. We've had a really nice push here. This trajectory has been really strong, but I do think it would be very healthy for this thing, whether you're looking at the 4-hour or the daily chart, to get some pullbacks. Like, this has pretty much been a one directional move. And what could happen here is you could get a week or two where people kind of, well, what's going to happen with the trade deal with China? We don't know about that. Or maybe if something happens that wobbles the market a little bit, that to me would ultimately be an opportunity to buy the pullback. I have a lot of stocks that I own that have done really well in this period of time. But I would like to get long S&P, like to get long NASDAQ, like to get long Dow. Yesterday, the Dow Jones was held down heavily by a singular stock. Anybody know which stock it was? It was UNH. UNH got absolutely crushed yesterday. This is a huge United Healthcare group. Massive drop for this stock. And it's a big weight to the Dow. So yesterday, even though everything was up, the Dow Jones was actually negative due to that.
In yesterday's stream, I was talking about waiting for these gap fills to possibly get short. So we've had those. The problem is, this morning I just realized I can't really take any positions because I'm not going to be here. I'm going away next week on Monday. I've got a bachelor party or a stag do, depending on where you're from. So I'll be away Monday to Friday. So I'm not really wanting to place any trades because I'll be completely honest with you. I'm probably going to be too drunk to be able to manage trades and things. So I'm just going to call it a week off and pick up the week after. So yeah, no entries today. I'm still short euro dollar cost averaging into that market. Very uneventful so far. Brought my average price up slightly, but yeah, nothing to report on at the moment. Pretty much break even. But yeah, I still like the idea of going long on the dollar for now. I still don't see a reason to short it, to be quite honest with you. We've got smart money that remains long. Fed's on pause. So I think dollar yen, for example, here, we spoke about this entry actually yesterday on stream on this 0.5 level. We came down. I mean, you know, I might be speaking a little bit too early here because this candle's a bit intimidating, but we've come down to this 50% level almost perfectly and pretty much filled this gap in, but there's still a little bit more room here. So we might be able to, you know, like I said, I'm not looking to take the trade, but if you were, you might be able to get slightly lower entry if we do fully fill the gap here. What else is there? New Zealand dollar also looks quite good to the downside, or sorry, New Zealand dollar, US dollar looks quite good. Pound US dollar, I like the idea, but it's not a trade I'm overly invested in yet in terms of not actually been in the trade invested, but invested in terms of sort of the idea behind it. Euro pound, I actually might take an entry on this one just because I'm quite happy to DCA Euro pounder with no stop loss and just let it go, and set some pending orders. So even if I am a little bit drunk and I'm not on the charts, at least then the trade can run and I don't need to do anything. Because as we've spoken about a lot previously, Euro pound is a very mean reverting pair. So even if it did come up to the previous highs, as long as my position size is small, I can get back in. So it's no problem. Oil's tricky. Again, I spoke about this one yesterday. I was waiting for an entry down slightly lower at these previous highs, which didn't happen. So I've not got an entry here, unfortunately. But yeah, it's a little bit late now. I don't have much of a fundamental bias on oil. I know there was something last night, wasn't there, with Trump and Saudi. I'll be honest, I didn't listen to it. I've got no idea what was said. It was probably a little bit unprofessional from me, but like I said, I'm going away next week. So even if there's something interesting, I can't do anything about it. So I'll just chill for a bit and do some research on the weekend. Okay, let me see what's going on. Hello, Bashi. Good to see you. Mehdi, Andreas. Thoughts on dollar Swiss? Yeah, I've got dollar Swiss here, actually. This was another one on the watch list. It's basically all dollar crosses. So I'm interested in buying dollar primarily, selling off yen and Swiss. Obviously, we've got what I view a slight rotation from the risk off market to the risk on, which means ideally we're going to see the yen and the Swiss start to lose some value. However, we're not seeing that really at the moment. I mean, yes, the yen's lost value, but it seems to be putting up a fight. The dollar's struggling, euro's pulling back to the upside. So whether this is just one of those days where we have a little bit of a counter move, I don't know. We'll see. Either way, it is what it is. I know I'm a bit flippy floppy today, but like I said, not really got much of a what do you call it? Much incentive to be in the markets right now. So some gold. Yeah, I do still like gold shorts, but there's no way I would be shorting it here. This is a bit of a death trap to try and short. I think actually this would have been a great trade for scalpers. Just get some momentum on the break of the support. I think that could have been a nice trade, but I need to see this gap get filled. I don't like to see gaps in. I know obviously Nick was speaking about the gaps in, I think it was GLD. I don't trade GLD, I trade XAU. And in XAU, we don't really have gaps. And if we do, they often get filled. Actually, maybe not. There's one here that's not been filled. So maybe I'm lying. But yeah, just for my own mental peace of mind, I would need to see that gap get filled. Same thing that I was doing with euro dollar. I couldn't have taken the trade before this gap got filled. It got filled now. You know, like I said, if I wasn't going away, I might have been a bit more interested in actually taking that short position. So yeah, point is probably back up to this previous resistance or fill this gap somewhere in this area. Then yeah, I might be looking to go short. I just don't see a reason that gold can maintain higher levels. I think coming back down towards 3,000 at least is plausible. Yeah, like I said, I just don't see any factors for gold right now. Gold shorts only if you're a 1 minute scalper. I've got to disagree there, ball out. But we do this, don't we? We have our agree to disagree moments. What else have we got? I think that's it. Actually, there's kind of a quiet one. I'm not set on euro pound. I know earlier I said I might take a DCA position or start a DCA position on this one, but we'll see. If we don't come back up to this previous resistance, I'm not going to bother. As I was saying yesterday, I think the New Zealand economy is pretty weak. I, again, don't see much of a reason to look to buy New Zealand dollar right now. So if we can possibly get the US dollar to start behaving a little bit and pull back, I think that the New Zealand US dollar position short could yield something quite nice. We're also seeing a bit of a reaction here on this fib level on the 0.618 and the 0.5. My cat's here. I'm not sure if he's going to start meowing, but we'll see. He's always got some knowledge to drop. Last time, he told me to full margin gold. I didn't do it, but it would have worked out quite well. It's a good day when James is on the show. I appreciate that, Kwang. Thank you. It's a good day when you're in the chat. Cat sounds bearish on gold. Yeah, I don't know. I mean, he set me up a few times. You know, it's like if I don't get the food he likes, then you know he'll tell me to take the wrong trades. He's a little bit manipulative. I got to go to the butcher today actually and getting some food. We've got him on a 70% raw diet. You can't need a stop loss. Well, you know what? You know they say curiosity killed the cat. It's like curiosity into margin calls, I guess, is his equivalent.
So I'm in basically at market. The second level for me is a 108. It's a 108.80 entry. 108.80, and the other one is just below the 618. It's basically filling this pocket, and that is a 106.50. So I have a 1.0880. I'll just type it instead of trying to freehand that. So 1.0880 and a 1.0650. Okay. And then the trade I'm in here is basically market. I got in around 111.88. I did that trade yesterday live. So those are my three levels. My target is up here. 1.1500 to 1.1550 is going to be my profit target. So that window is my profit target. Stop loss is there. Okay, I'll take a screenshot of that. I'll post that in Pulver Alerts. I meant to post that yesterday after my afternoon session, but the trade's still valid. Okay, so I'll get that posted. All right, good stuff. We did gold, we did oil, we did silver, we did Bitcoin, we did some stocks, we did some indexes. Let's go currencies. Aussie CAD. Maybe I still get a pullback on this Aussie CAD, and I'm totally fine with this. You know, this is a currency pair that it's one of my absolute favorites. You want to trade technicals, you want to trade pivots and structure and overbought, oversold conditions, efficiencies. Aussie CAD and New Zealand CAD are freaking awesome. So, you know, if this is a swing low, swing high, we get any type of pullback in here, I'm going to buy. I'm going to look for a symmetry swing. That's it. So if I get a pullback here, I'm still looking to add more, 8,800 to probably 8,650 area, add into a swing, you know, bring my cost basis down, look for a three-wave move, and I'm still trying to get this back to like 94. Okay, don't worry, BC, you can just close your eyes. Aussie Swiss still looking to see if this will carve out. If we have a pullback here, I'm looking for a 3 to 5 wave move, or we come back to the 200 moving average, hit this resistance. We just keep grinding higher, grinding higher, grinding higher. You know, I've said this too. If gold is going to continue to fall and pull back, I think that the Swiss pairs will improve. I'm already up some profit. I'm looking for a lot more, and I want to see this area get hit. So if we come up into that area, to me, this is a low to high swing. I'm looking for a pullback and then a push up into wave 3 symmetry. Aussie yen, no trade. The yen ripped today. Maybe this is just the backside of the trend line test, but that was not the trade. The trade was buy this thing during August or April's retest of those August 5th lows and ride this risk on. That was the best trade. CAD Swiss was probably that CAD yen was the best trade. This was the best trade. Technically, this was the best trade. This thing basically tested the low, and the dollar yen tested the low. The Aussie yen breached by a pretty decent amount. I mean, that's 90. We went down to 86. I mean, that's a 400 pip breach. That's not easy to trade. But CAD yen respected the low really nicely. Easy one to trade off those lows. Dollar yen tested the lows as well. Right here between the 141 to the 140 handle. And same thing, tested. Somebody asked me, would I be long dollar yen? I said, no. If you're long here, right, that's your trade. Don't be long at 148, So I don't like the trade now. You missed it. You missed an 800 pip move off those lows. So don't chase the stupid thing, right? All right, dollar crosses. I'm still looking for a pullback on Aussie dollar. Hopefully we'll get one. Hopefully the Aussie dollar can settle in here. We can get a swing and then a push into open space. As long as we don't invalidate these lows, I think a swing trade looks pretty good on Aussie dollar. And then open space, this thing's great. If we get to like 64.50, 6,500, there's not much stopping this thing until we get to 68. So, I mean, again, it's all based on the dollar, but if we hold structure between about 63.50 and 6,300, then I like that as a swing trade. CAD Swiss, same as Aussie Swiss, just waiting to see how this one kind of plays out. Do we find some tops in here, pull back, and then have a symmetry swing above the 200 moving average, and then take some profit in this cluster? I'm good with that. CAD Yen, Swiss Yen, Euro Aussie, not really. I mean, these are just trades I'm not really liking. Euro CAD is still okay. It's not moving as quickly as I'd like, but I still think this thing's going to push down towards like 5,400. Be careful on it. I mean, it could be just a very annoying range. But if we find this level or lower, then be protecting your short positions if you're short Euro CAD. Euro Swiss, this one is looking better, kind of the same situation. Do we have what it takes to get all the way back up here to this high? If we do, I'm taking profit. Then we can pull back. I can structure this trade again and then get a swing up. Euro Pound, no trade. Euro Yen, no trade. Euro New Zealand, no trade. Euro Dollar, I just explained that one. Pound Aussie, I mean, if you're looking at a shorter time frame, this might be a low to be participating in. See if this thing rips back up to these highs, but it'd be tight stop and a run back up to like 2.10. You know, look at it and confirm it on a smaller time frame. Pound CAD, no trade. Pound Swiss, still long. If you got long anywhere in here, my target is going to be at 1250 to 1350. So if you're still riding this thing out, there's still some upside potential. You know, we could get back to the highs, but also trailing stop loss into those levels. Pound Yen, no trade. Pound New Zealand, no trade. Pound Dollar, nothing yet. This one is sideways. Maybe a dollar retracement would maybe pull back this pound dollar a little bit, but I'd wait. I think Euro Dollar is a better setup, so honestly, I don't like the pound dollar. New Zealand CAD, same as Aussie CAD. We get a pull back into this area. This is awesome structure right here. If we get a pull back in, and this one, I wouldn't mind just doing this. Buy, buy, buy. Stop loss below. If this level holds and we get a symmetry swing, we're pushing back up towards these levels. That's a nice profit. Low risk trade, high reward trade, probably good probability. New Zealand Swiss, still watching this one for wave structure. We get to the highs, we pull back, we go to symmetry. That's at least my profit target. If we go to fifth wave symmetry, I'd have to be pretty patient for that one, but I have been patient on these Swiss pairs for a while. New Zealand Yen, I'd say no trade. Not right now. I mean, you had your chance to buy the lows. New Zealand Dollar, similar to Aussie Dollar. If we go high, low, lower high, lower low, there's areas to buy in here as long as we don't break the lows. This is open space trading. And the hard part here is if you want to buy in this area, obviously it's a swing trade and that could work out really well. But if we just break the highs, we might still just make higher highs. Like this open space might be an easy trade and I hate this entry, but if it was just a buy stop and another buy stop and another buy stop and this thing just goes higher to 63.70, maybe that's the trade. Let the dollar be all the noise, like be noisy, be messy. But if it just goes higher, buy stops do the job. So rather than trying to, guess what the dollar's trying to do. Dollar CAD, I don't like it at all. Dollar Swiss, I'm still long. Dollar Yen, no trade. So that's kind of it. Top down, currencies, indexes, little futures action. Price is still contained. So we had like a little bit of a fake out move right there. We might just be sticky right around that 5,900 handle today. We have a major expiration on Friday with monthly expirations. It's crazy how much of the options expirations are all calls for this cycle. It's like 60% of the S&P are all call options, and all the puts that were put in are going to just be worthless. All the puts were, hedging into those April lows. I'm just curious if we have a direction. I mean, this little melt up move from Tuesday would be nice to kind of see like a melt down move for today if we have any direction. Otherwise, I think by Thursday, Friday, like this is probably going to get filled. If there's any real direction, otherwise, after this week's expiration, coming into next week's trading, don't be surprised if we're down here. I think this market has, just efficiency standpoint, probably a little bit of a pullback coming. Okay. All right. I think that's going to do it for today. So all in all, we'll see what happens. I like buying dips. I just think the dips have to come. We need to fill this gap from Monday. If we do that, I think that'd be great. We pull back here. That's at least where I'd consider, okay, now I'm going to look at some 1-1-1s. Now I'm looking at some ratio spreads. Now I'll start revisiting some trades. Honestly, my least favorite trade right now is going to see this, if this market just keeps going higher, 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 higher. I mean, look, I did synthetic longs here. I bought debit spreads. I sold a bunch of puts. I made a lot of money. Okay. But it's not enough. It could have been better. I could have been more aggressive, but I mean, nobody knew. You know, I didn't know how violent and volatile this thing was going to be. But here we are, like, okay, there is clearly resistance. I spent a lot of time just technically going through the charts. It's like, okay, so a symmetry swing, that could be resistance. A measured head and shoulders, that could be resistance. None of them, right? Like, nothing has stopped yet. So this, especially this gap, like that gap kind of threw me off of like, okay, we're up 3% higher than like all these meaningful levels. We were above the 200 moving average. So even looking at the, I think I've got a blank workspace in here. This one. Okay, this is a 50-day and a 200-day, and we haven't spent any time in between. Like this market's like, nah, there's no indecision. Just go gap. I mean, that's what I'm talking about. This is where I thought, yeah, a little bit of indecision, and it just blew higher. So same thing on the SPY, and that's pretty unusual. Like that is a kind of a blow off rally. But all that tells me now is, okay, so we're in between here. Everything's kind of back above, but I think there's room to kind of pull back and have a gap fill. We could still be well supported. The bulls have a lot of room. The bulls have a lot of cushion now to still hold and maintain this recovery, which is kind of a good thing. But I think a dip would be, I mean, as somebody that wants to buy the market, a dip would be nice. A dip or pullback would be nice. Okay, and it's not just there. Like, I'm not going to get crazy aggressive, but I will start, putting on some trades that protect me from a bigger pullback, so I can still, if I was to take any assignment, I would own it low. I'd own it at like April lows and work with it. So anyway, point is, if we get a pullback here, that would increase volatility a little bit. I'll sell some more premium and probably do like a 1-1-1 trade or a SPY ratio spread, and see if I can pull in. I mean, if it's an income trade, it might just be a couple $100. But it's better than nothing, and I'll just keep kind of playing around with that over the next 30 to 60 days.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.